Alright guys, I am back. It's been about 2 months off the channel. Quite a bit has happened. Trip to Japan, moving house, had my birthday, celebrating for about a week. And yeah, you guys will notice the new location in the background. This is the new house, a nice 2-bedroom apartment. I'll pop up a quick video on screen in case you guys are interested. But for those of you who are new, I know you won't really care, so I'll keep it quick. Today's video, it's just going to be a short one for me. About a week or so back into property trading, we've had two 30-minute trades, I believe. One loss on GJ, if I remember correct, and one 7% win on GBPZD. So today I'm breaking down this position. Everything behind why it was valid, the market structure, and it's a true one candle liquidity. So I'm going to go into when one candle liquidities are actually valid on the 30-minute time frame. I get this question a lot in comments, so yeah, I'm going to clear it up here. It can be a little bit different between the 5-minute and the 30-minute. This is just going to be focused on the 30-minute specifically. So yeah, with that being said, this was a nice 7% position here. I'll have the entry, my personal entry and the signal pop up on screen for this. And yeah, then you'll be able to see exactly how I took this. So essentially right here, we had 7:30 candle tapped into the zone. Now, as you guys will know, pretty much we only enter on the candle close. It has to not close in the zone, close bullish, all the rest of it. That happened, but as you'll see by my entry, I still waited simply because this was London Open, right? A session open, there's a high chance, even if it's very small like it was here, we're always going to create a bottom wick. So that gives us a better chance for a good entry. If we don't create a bottom wick and we start to push up here without one, I'll either just leave the position or it's likely it'll come back down, and in that case you can potentially avoid a fake out. So yeah, I like to do this on session opens, but you don't really need to. This entry was already very good, and that's why I entered extremely quickly on this wick. I wasn't going to wait for anything larger or risk missing the trade. So it was just a very small factor, you didn't have to do that, but that's why my entry was slightly better here. It negates the spreads, which already are very small and don't matter that much for the 30-minute, but it puts me in exactly where the close is. So that's what the entry was for me, standard bullish close. Now, everything behind this trade, why was it valid? First of all, for the 30-minute time frame, the most important factor, no matter what, is overall trend and direction. Right here, I don't really need to do any analysis on this for you guys. It's a trade you will always take, consistently taking our highs very clearly. We're at all-time highs over here, which is why I would not target 1 to 10 or anything higher, because over here, we don't have any price action to the left to base that 1 to 10 off, which means we're just basing it off hope. And yeah, you don't want to do that in trading. So no 1 to 10 for me. If I did aim for a 1 to 10, it would have ended up not hitting. So a lot of the times, when you do the correct thing, you tend to get rewarded over a long period of time. Of course, on a short term, you can't base anything off that. Perhaps this time a 1 to 10 would have hit, but that's not the correct thing to do when you're at all-time highs since like the 90s or something, and there's no price action to base that TP on. So with that being said, we're trading in trend, so that's why we have the confidence to be able to hold to the highs, right? If we're not sure on the trend or things aren't clear, you're going to start to get nervous when you're up, 5%, 6%, and you start to see retracements coming in. You're not going to be able to hold confidently, so you have to be strong in trend. With that being said, easy target the highs was to 7%. Now, the best way to think about this, to have confidence in holding, is that regardless of where our target is, let's say it's a different strategy where someone trades whatever type of entry it is, and they have a stop loss like this. For the person trading that strategy, when this same retracement comes in, they're not going to care whatsoever because they're only up 1.5%. But the distance from here to here is exactly the same, regardless of where the stop loss is. It's the same price action. It just so happens that our strategy allows us to take advantage of entries such as this. So don't be nervous when you're in the position thinking, oh no, retracement's coming in, oh no, normal supply zone here, what's going to happen? The most likely case is you're only thinking that way because of how much profit you're in. You have to be able to hold through this type of thing to take advantage of the strategy's edge. So with that being said, that's a good way to think about things. This is exactly the same as someone having a stop loss here. Then all of a sudden, it's only 1%. It's easy. So we can take advantage of things like that. Now, when is a one candle liquidity valid? The first thing is it has to have a fake out and form a normal demand zone, which is fairly clear. In this case, this one was very good because the zone for the one candle liquidity, this normal demand zone, was very close to our zone itself. What that means is this fake out happens and relatively quickly after it instantly loses, hit stop loss, our zone then gets tapped. So it's actually having an effect on our zone, even just based on timing. It's not having a fake out of one candle liquidity and then 10 hours later tapping our zone. That's not really going to have any effect. So yeah, that's what you want to see. First of all, the fake out on the 30-minute time frame, it's completely okay to close in the zone, right? Normal supply and demand traders especially, they don't care about anything like this. They'll be trading in a style where, whatever the entry is, stop loss is underneath the zone, and yeah, it can consolidate in here, close in the zone, do whatever, as long as it eventually goes to what is 1-to-1, 1-to-2s, depending on entry model, so they might have something like this for a 1-to-2. With that being said, regardless of what happened in the zone, decent rejection, 2 candles after it, 1 bullish candle, this one, bullish candle, breaks above the high of the previous one, 3 bullish candles in a row. At one point, we're all going very bullish, breaking previous highs. So it's a very nice fake out for the 30-minute time frame. After that happens, loses down here and taps into the zone. Now, it's okay to form this type of structure on the 30-minute where it didn't tap straight into the zone, as long as it doesn't hang around for ages or start to take out highs and do awkward movement. So that's completely okay for 30-minute as well. It's almost a small bonus. It's almost like 2 fake outs to the upside, taps into our zone, and now it's ready to go. The next best thing about this trade is that this is the bottom zone, right? It's a recurring theme across all my videos, 30-minute especially. Bottom zones, when it's the lowest untapped zone, it always has more power and more potential. And we see right here, this one is untapped. Below this, there's no other zones from this area of structure. Something that people get confused is they might see a zone all the way back here and say, let's just pretend this one was untapped for the sake of the video. They might say, oh, no, there's a zone over here. It might actually be untapped. Okay, it is. Perfect. So they might see this untapped zone and they say, well, it's not the lowest zone because we have one over here. That's not exactly true. For one, this is kind of too far back, but it's a separate part of structure. This untapped zone caused this move. We're not trading this move anymore. We're trading this move to the upside with our supply and demand. So when we come back to here, this is the move we're trading. This is from a separate move in the markets. So this is the lowest untapped zone as a part of the structure we're trading, which is essentially this move. If there was a zone underneath this, for example, right here, if there was a zone, this would be the lowest untapped zone, right? Of course, in this case, there isn't one. So this is the best place for us to trade from. With that being said, the next good thing about this trade is potential. So in kind of, if you're going in order of things you value most, the first one is overall trend, right? That's very clear. It's always going to be good. The second one is potential, retracement size, and how it's relating to what's currently happening in the markets. What I mean by that is potential, retracement size. If we're at all-time highs like we are here and we retrace this much and there's a zone we're looking to take, there's not a lot of potential, right? This is not very good price to get in at because the highs are only right here. There's not much money to be made with that small move compared to this move. Secondly, based on recent price action, this is the type of thing we're seeing. So when that happens again, more or less the same size, standard structure, towards the same areas from beforehand, we can expect it to repeat. The markets like things to repeat. So when you see that type of price action and you can take that, again, another 2 things that line up. This is a high quality position. With that being said, many people will end up missing this purely because of the one candle liquidity. So it's important that you know when you can utilize it, right? It has to kind of be A plus clear trend. And a couple of these things as well lining up is a massive benefit. So yeah, with that being said, we had everything here and characteristically of GN ends up taking off very quickly. And GN for the most part is a pair where I'm okay with not having TP1s and just aiming for full TP at the highs, which is why I had this here for 7%. So yeah, by the way, the screenshot is one of my accounts where I didn't close. I go to sleep in Thailand somewhere around here. So on the couple accounts, I was out for 6%. But like I said in the message, full TP at the high of 7% was standard. And yeah, on a couple accounts, I still left it in. So very nice position here for 7%. It doesn't really get much better than that, to be honest, on GN. So nice to see kind of volume coming back into the markets. After that, our analysis that I was putting the daily forecast essentially is exactly what we looked for. I ignored a couple of demands around here that could have been taken. We were expecting a larger retracement after this triple tap here and being at all-time highs. This was kind of where we were looking for. It's happened to go further, right? But all that really matters is that you have the next move down and you know where you're looking for next. whether you're taking trades or not, or whether it's to not take trades, which in this case, that's what it was for me, to not take trades around here and only look for positions after we've come down towards this area. So with that being said, analysis is always important. All this stuff, by the way, every week I do the market review in the Discord. I break down all these kind of price action details that we go through from the previous week's live market data and any trades we had. So yeah, with that being said, all of this is kind of included. The only other position we took on the 30-minute was a GJ demand, I believe. Let me take a quick look here in the signal section. GJ supply, of course. Okay, so yeah, on the 17th right here, we had a GJ supply. And yeah, this was position. Trend-wise on this one, we had a large gap to fill to the downside, so we were kind of looking for potential supplies a little bit more than we might have been anyways. On top of that, this was already a good position, structure-wise, clearly breaking lows, retracing back to this zone. So we had decent potential here. The JPY pairs unfortunately have been kind of awkward recently. All three of them, after that large gap to the upside from the JPY news, haven't been moving too good. But regardless of that, this was a supply we would always take here. Clear trend to downside. Liquidity in front of the zone, you have this area of consolidation at a close distance, and it's a top zone, right? Highest untapped zone from this move. There's nowhere else above it you would really look from. Initial entry here, this is the one we took. I gave it a larger stop loss just in case because we tapped right on the edge, and that ended up being stopped out anyways. Due to the fact that JPY pairs are kind of moving awkward, as well as the fact this is a Friday here, getting into New York session, I wasn't trying to take any sort of re-entries on this, and so yeah, I left the re-entry. With that being said, it's not really one I'll look to take with the Friday timing, like I said. So looking at this, that was the supply we took the minus 1% loss on. And yeah, that was everything last week. So a 6% week on the 30-minute time frame. A good week to come back to officially trading it. So yeah, with that being said, that's pretty much everything for today's video. I don't think there's anything else. Just a short one, or maybe it's not. I've just seen it's 13 minutes in the Discord now. Coming back, the market reviews, the daily forecast has the 5-minute now included. With volume coming back to the markets, these are kind of two things I've been looking to do again. So with that being said, link in the description, and I'll see you guys in the next video.